Amazing. Welcome back, superstar traders, to the EQ Markets global platform and YouTube channel. I'm super delighted to host you one more time in this brief video that I want to show you something really important, right? This is your favorite analyst, 𝗟𝗏𝗘, and yesterday on our Telegram channel, this was one of the trades that were dropped, okay? One among the amazing trades that took so much profit. And this is apparently a risk to reward of 1:10. I mean, amazing. If you're risking $100, you're cashing out about $1,000 on this trade, and it's worse on gold, right? So, yeah, this setup might make you a millionaire. Risk $100 and cash out $1,000. And of course, this was dropped around 6:19 p.m., right? Apparently around that time. All right. So as at 10:32 p.m. yesterday night, we were giving updates on the movement so far on gold, right? Already we were running in massive profit. And before we could wake this morning, gold had already smashed a 750 pip movement TP, and it closed our 1:10. All right, the price delivered to our take profit effortlessly. So I thought it wise to show you guys the process that I went through to find this amazing setup that gave 1:10. I mean, 1:10 is no joke, right? It's no joke, guys. It's no joke. So let's quickly go over to showing the process on how I was able to find 1:10 risk to reward that gave us that setup. Okay. So first and foremost, we are now on our chart. Okay, we're now on our chart on gold. So this is what I could find on the daily time frame, more like a pitchfork setup, right? You know that pitchfork, right? That indicator called pitchfork. Okay, sorry, let me. All right, so you know that indicator called pitchfork, right? It goes something like this, then like this, trying to measure equidistance, all right? Or if it's a bearish trend, it goes something like this, and like this. So probably you need to just check it out, right? Check it out. It's simply used to measure channels, equidistance, and so much more in the market, right? Apparently you just need to understand the concept, maybe not necessarily use it. Okay, so this is a trend line channel that good had been respecting on the daily time frame. And of course, it looked more like a pitchfork because, of course, within the upper channel and the lower channel, we had these amazing trend line that could also go through, touching some very key points, okay? Somewhere around here as well again. So gold, as of yesterday, was currently trading on this zone, yeah? And of course, we took so many more trades here. But after taking those trades, I noticed something really significant. So knowing that the first thing first is trying to find an area of value or a point of interest on a higher time frame, say maybe on the 4 hourly time frame or on the daily time frame, whichever time frame you're able to find your point of interest, that would be super amazing, right? On gold now, I've been able to find my area of value, my point of interest on the daily time frame, right? So area of value is still same as point of interest, okay? It could be used interchangeably by depending on the type of trader. SMC traders will love to say point of interest, okay? And of course, the retail traders will like to say psychological level or area of value or demand and supply zone, whatever. They are all still the same, okay? So this particular area is a demand area, and that's why it's called an area of value or a point of interest. So prices coming into this area of value tells me that most likely there could be some bullish reversals beginning to take place on the lower time frame. So what I did was very simple, okay? I had to go down to a lower time frame, and this is what it looks like on the 4 hourly time frame. You can see that here. Okay, so this is what apparently it looks like on the 4 hourly time frame. So when prices were dropping down to the trend line, I knew for certain that, okay, look, something is really going to happen here. But if I'm looking at it on the 4 hourly time frame, I won't be able to still understand and take advantage of the quick movements in the market. Because listen, for you to most times catch 1:10, 1:20 trade setups, you need to find that area of value or that point of interest on the higher time frame and scale down to a very little time frame to look for the quickest changes that is happening in the market. Okay, so I had to scale down to the 15 minutes time frame. And on the 15 minutes time frame, this is what I could find. So we had yesterday we had an high impact news in the market that caused this large volatility, but that apparently did not still change the technicalities in the market. It did not change the trend of the market. It did not change nothing about the market. Okay, so after all of this and prices were falling back to this same zone, I knew for certain that price was going to respect this other block here. All right, so this is also going to be very significant and beneficial to people who understand SMC concepts, okay? So I found this order block here. Amazing. This whole order block here on the 15 minutes time frame. So this whole order block on the 15 minutes time frame. I knew that prices falling down to this order block, it was going to respect it. And of course, I knew this order block was valid because of the imbalances that were created after the order block. You can see from this particular candle up until this candle, that's a whole lot of imbalance here that was created, right? So I knew for certain that, okay, if this is a valid order block that would most likely be respected. But then I still need to catch the move as early as possible when it's about to start changing, right? So don't forget, this is my 15 minutes order block, right? This old zone here is my 15 minutes order block, but now I'm on 5 minutes, right? So I'm going to look for the order block or fair value gap on the 5 minutes time frame. And of course, I found my order block on the 5 minutes time frame, which is this candle. So let me take out the 15 minutes candle because the 5 minutes candle order block is still within the 15 minutes order block handle, right? So what I did was simply to take this off, and I have my other block represented only on the 5 minutes chart. So I knew that if price were coming down to the 5 minutes chart, I'm definitely going to be expecting the reversals around that area, okay? So what happened next? Prices came into this zone, broke below it, but I did not want to take my trades there, okay? So I waited patiently until I could get confirmation, okay? Now, what exactly is that confirmation? What exactly is that confirmation? So every one of you on this channel already know already that I use the commodity channel index as my confirmation, whether it's a smaller time frame or a bigger time frame. I use my commodity channel index as my confirmation, okay? And what happened on the commodity channel index? Apparently, I have my move, right? So for those of you who probably will be watching a video on our YouTube channel for the first time, right? I've already made a very explanatory video to teach you how to use the commodity channel index like a professional, okay? Maybe like myself, right? So I've apparently showed you videos on how you could do that. And I'm going to leave that particular video in the description of this video. So just check the description of this video. You're going to see the video on how to use the commodity channel index like a pro, okay? So you probably have an understanding of what we're talking about here. So yes, apparently price started moving up from here, and of course from my commodity channel index, I got confirmation here on this next candle here, right? So apparently I would have taken my buy trade here, but obviously I somewhere kind of missed a very sniper entry. So, but then I was lucky enough that prices came back, and of course this was now my other block. Although the imbalance were not really good here, but this was my other block, and prices came back to this. So I had to set up my risk to reward, right? And my stop loss was just a little below this, right? If you can see my stop loss, somewhere around 2013.082, okay? And of course, my take profit is to this high here because this is where prices fell off from. And of course, knowing that prices is trading on the area of value on the higher time frame, there's certainly no way, right? Prices will most likely break that trend line, right? Because on the higher time frame, it's on the support level, it's on an area of value that was connoting a buy, right? So we're taking advantage of the early buy move on the smaller time frame. So I am very sure, right? Say 90% sure that prices was going to go up, right? So yeah, we then add our stop loss there. And of course, if prices will really rally up, then of course, Of course, you know how prices would move, right? For a buy trade, yes, prices goes up, creates higher high, and then higher low, another higher high, another higher low, another higher high, right? So if I were to discover a buy and take it early enough here, to discover a buy and take it early enough here, I'll probably be looking at this high here, right? I'll probably be looking at prices coming to this high here, right? So this was just a simple concept that I used, okay? And then, so let's go back now and let's see. So I just used that simple concept there. If prices were supposed to continue creating higher high, higher low, higher high, higher low, right? Then it simply means that this particular high here is will be tested or even be broken. And of course, that became my take profit level. And I discovered this gave me 1:10.5, just like I showed you on the Telegram channel that I posted yesterday. All right, so and then it went and all the way to the top, and we were able to smash our take profit level effortlessly, right? Before money, we were able to smash it. All right, so in this video, the takeaway is that when next you want to discover a high probability setups, or you want to find trade setups that can give you 1:5, 1:10, or even 1:20, go to the higher time frame, say the 4-hourly or daily time frame, find a very good area of value, right? Find a very good point of interest. Of course, you know, if it's a demand zone, it's going to buy. If it's a supply zone, it's going to sell, right? And then scale down to the smallest time frame and look for the quick changes that are going to happen. Whatever method you can use to confirm your trade. For me, I use the commodity channel index. Check the description box below and you find a link to watch that video, right? You can also use my method to confirm, or if you have your own personal methods, it will still be amazing to use your methods to confirm on how to take these trades, and you'll be super successful. All right, see you in the next video. Bye for now.